All right. Are you refreshed? Everybody up and running? At least a little bit. I will try to make care that you don't fall asleep afterwards. So after the sweets, and see how can I give you a little bit more details on this, I would say, very complicated topic. But before I jump in, first of all, big shout out to the Warsaw Stock Exchange team. Thank you very much for putting this conference together. And I love this stage. It's really nice what you have put up together here. I enjoyed time in Warsaw very much, but in German, there's a beautiful word. It's called Pechvogel. I have no idea how to say it in English. You know, I'm not so lucky with the weather too. I'm quite often here, but to be honest, I had always a bad weather here. It's unbelievable. Really, every time. Even it's snowing, it's raining, or it's a crazy wind. I have no idea why. I think it's my personal destiny, but I have to change that. I have to come much more often to you here. Yeah, that's the best example. You know, I joined today, and it's already raining again. Probably. I take it personally. ESG is a huge topic. And in the discussion we had this topic, kind of, what is ESG? To define what exactly do we want to reach with that is not so easy to do. And impact investing is even more special. And I've been asked already before, I mean, what is this impact investing? What does it really mean? It's environment. Yes, it is. But there are much more shades to this topic we can do and we can reach over investments than only E, environment. But let me go a little bit more into detail. And today, I'm not going to be speaking about myself, about our company, how great we are. We are great. I will be speaking about what the investors do. What investors try to reach with that. Because ESG is kind of I would say, not a very well-defined topic. We've been working with investors on this for the last few years. We've been asking investors on all the separate E, S, and G topics. How do they behave? How does it impact their life? How does it impact their investment decisions? So 2021, 2019, it was all about ESG. Last year, we went into net zero and impact investing. So these two topics, we have spent some time in speaking to investors who are the largest movers, who have some experience in this topic, who are doing already some investments here. So we've been speaking to the 50 biggest pension funds in the world with approximately 3.3 trillion US dollar assets under management. So who are the big movers here? First, we need to understand what their task and target is. What do we want to reach with that? And we need to define a short structure for understanding. That is, this investment has to be made intentionally, so intentionality, on purpose. So I want to do this trade. You want to reach additionality, so you want to reach kind of this positive outcome that is being delivered due to your investment that otherwise would not have happened. Okay? Additionality. Measurability is something we want to know, what did we reach with this investment? How can we report on whatever good we are doing in the market? Okay? So this reporting part is also very important. And finally, it's positive financial outcome. So we are not for free here. So this topic, kind of this antagony to the philanthropist approach we have seen in the past, really doing something good out of my will, but not expecting returns out of that. That's not something we are playing right now, and what pension funds are doing. That's not their business. We have been speaking to clients or to pension funds from all different regions and from all very, very different segments. So DB plans, defined benefit, DC, defined contribution plans, hybrid plans, public plans, private plans. To get a picture of the market, how to define this impact story and how to understand the clients, what they are doing. Because in the end, we are just solution providers. We are providing solutions for clients, investing into ideas, into regions, into sectors, and understanding clients for us is kind of the utmost important topic here. But let's see, what is the investment appetite, or kind of what are the drivers for the pension funds to go into the impact investing? It's regulation. Regulation is driving a lot of momentum. For example, the Net Zero Initiative. Net Zero Initiative has been very strong in really pulling clients into discussions, into decisions, how to reach a given goal of this Net Zero 2050 decarbonization. It's been approached by governments and corporations, and in the meantime, above 80% of carbon entities are covered through this initiative. That means a substantial part of the market is already in discussions on these topics. United Nations is also estimating that we need 5 to 7 trillion US dollar annual investments to be able to reach the 17 UN SDG goals. That's really a lot of investments needed there. And I have really bad message here. Today, Austria was publishing numbers, and we are just 20 years behind the plan. Just 20 years. Instead of 2030, we are in 2050, when the game is going to be kind of really already decided. So a lot has to happen in order to move the things forward here. So the governments also are being forced. But, for example, UNPRI has impacted 800 new laws being implemented by the governments and 550 laws being revised. And also thematic investing is coming to the forefront. So thematic investing is something that the pension funds are really interested in, and where a lot of this, I would say, let's come to it a little bit later. Let's look at the public markets. Here's one of the points: enhanced engagement activities. That is getting very strong meaning. The pension plans understand themselves as universal owners. So they own assets for a long term and want to keep these assets. And they see themselves as agents of change. So they understand themselves as, what can I reach with my investment, and how can I deliver this goal for my pensioners, for my trustees? And second really big development here is, I think we can't see it here, it's actually the movement of companies from laggards to climate leaders. This change being happening, and one of the initiatives most important behind this is the SBTI, so Science-Based Targets initiative. That is really developing with the companies a target how to reach these decarbonization rates, or kind of to keep the Earth warming in the limits. So this SBTI has a huge backlog in company, I would say, plans how to reach these goals, even to be able to publish it. So a lot of the companies are really pushing on this background, publishing these science-based targets, how to keep this European transition guidelines and targets really alive. Adoption of the investing is actually something really, we see a lot of potential there. So for the active portfolio, it's a little bit higher. It's approximately 30%, where impact investing is already implemented. On the passive side, it's just 4% who are already fully embedded, and 18 are in the implementation phase. So here, it's a new phenomenon, small numbers, but positive progress. This one is interesting. Let's take a look on the themes and on the outcomes. What are the themes these pension funds are looking at? What do they want to invest? And if we look at it, affordable and green energy, biodiversity, reduced inequalities, social housing, quality education. It's not only E, it's not only environment. And those investment themes are very much impacted or aligned with the UN SDGs. UN SDGs, however, have been made for governments, for legal entities, okay, for the law-making part of the legislation. But it's delivering a guidance, kind of a framework to work with, and the companies can kind of embody those investments and make them a priority. There is one point, governance, which is a very interesting one because it's a little bit outside of this investment topic, but governance makes a huge, I would say, importance, delivering to the clients a framework they can work with. That's why it has such a high importance from this outcome perspective. Yeah, outcome, where are we? 44 positive, 22 negative. To be honest, the study has been conducted last year. So we had 2022, impact from Ukraine war. I think those numbers have gotten even better, but it's a long-term game. And pension funds are not only for 1 year here, so the outcomes are more long-term driven here. Which markets do we look at? Private equity, bonds, private debt, equities, infrastructure, real estate. And you can see on this dark balcony, every position is kind of growing in importance over the next 3 years. So we will see much bigger interest in increasing kind of the capital allocations in one of these asset classes that are, you know, by definition in the impact space. But how do we do that? How do we implement something like that? You know, and we in finance, as I mentioned before, we tend to make stuff so complicated. And that's something we need to change. Also ESG, what is ESG? There are so many different solutions on ESG, what we can you know, put on the table. I mean, I can speak the next 2 hours only about our index methodologies for ETFs. And in the end, maybe nobody will exactly understand what I want to say. So here we need to get much more concrete on what do we want to deliver to the clients and what do the clients really need. First of all, customized funds. This section is an interesting one because it's the EU climate transition benchmark and Paris-aligned benchmarks. This is going to play a huge role going forward. So the PAB, CTB, so climate transition, Paris-aligned benchmarks. There's a very good reason for that. It's benchmarking. These products are not benchmarked against, for example, MSCI World. They are benchmarked against the net zero initiative. So against delivering the net zero path. It's a regulatory push. So it's nothing we are kind of coming up. So this segment you see is going to double over the next 3 years. Thematic funds. Thematic funds are a real interest in the market. So it's more this UN SDG-driven investing, green social bonds. So this direction is already also available, and we are working on a lot of solutions, really making the UN SDG also investables as a separate product solutions. And in the end, we see the core funds, they're on the below. So core funds, they see the lowest increase compared to the other two groups. So here, ESG is already implemented, and these clients are more looking into implementing climate-related, I would say, way of thinking instead of this pure ESG. And why is that the case? I will jump back to this slide. To mention, clean water and sanitation, super important. We had it also in this environment piece of the study. It's getting diluted under environment. So in ESG, this clean water and sanitation, you are losing a little bit the touch to this investment goal. Or for example, labor rights, that was also one of the topics we have identified as very crucial for the future, but still, it's in the social pillar getting somehow diluted. And this is something we need to work out and make it concrete and investable from that perspective. Coming back to the slide, this is very, let's put it that way. Thematic investing means tracking error. Okay, you need to take some risk to go into this market. Are the investors willing to take this risk? Not right now. We are in the phase of learning, of experiencing this kind of investments, and 54% are willing to take a tracking error between 0.1 and 0.9%, so not even 1% tracking error. And this is something that is going to change. The more experienced investors get with these solutions, with these investments, with the feeling for tracking error or for the underlying asset, also the tracking error acceptance will grow. So we will see kind of movement more into, tracking error coming maybe to 3 to 5% direction. Why we do that? There is one very important point, actually from the first page, I would like to mention, because it's very important. In the end, also the pension funds have fiduciary duties. Duties against their pensioners for financial security in the future, but also not giving them only the security of receiving financial security when going into retirement age, but also giving them a world they can still live in. And that's the idea why this whole, I would say, trend is evolving very strongly. And among those biggest investors, it's something they really have on the table on a daily basis. And coming to the last one, which is also a very important one, and impacts actually all of us. What is the right selection of the partner? And on this slide, there is one point. A few years ago, it wouldn't be at all there. It didn't exist. That's the first one. Stewardship and proxy voting. This topic has such a big importance for the investors because they want to speak to the companies. They want to deliver a message. They want to have this exchange. And we had this example of a Swedish pension fund who really was there looking for the place at the table. They want to understand the strategy of the company and leveraging on this understanding, leveraging on this information to kind of push it also forward. So really having this stewardship in place for a company is one of the biggest and important points, at least for the investors going forward. Reporting capabilities, being able to report on what are we reaching with our investments. And important one, which was leading the pack before, are fees. Fees and charges reflecting value for money. And that has changed. Right now, it's not all about money, not about super lowest fees. It's more about the value you are able to deliver for the client. And this is something we need to bear in mind as investors. What is the idea behind investing? We are speaking about ESG, but what do we generate with these investments? What is the target? What's the task? And we can start kind of making this decision by very simple details. And that is for myself, take a look on your daily life. How are these things influencing my life? And they are, unfortunately. And they are strongly influencing us. So my super small house I have in Wiener Neustadt in Austria, the water dropped 30 meters below the normal standard. So we are losing water in our region. That has never been the case. And this kind of, signs are getting more and more, we are getting comforted with. And I think this clear communication in the financial industry is something we need to work on, really to understand how can we give our clients the right solutions on hand, really to make the change also happen. From my perspective, thank you very much for your attention. I hope you are still awake and open for questions. Don't be shy.
Oh, there is a question from behind.
Hi, good afternoon, Jan Rakel. Thank you very much, Thomas, for a wonderful presentation. Just one question, because at the very beginning you showed us that like roughly 2/3 of the respondents were defined benefit plans. 1/3 was, let's say, DC plans. Would you think that if we were to target DC only, the respondents would be slightly more would be less risk averse in the responses because of, let's say, the DB plans having the risk of being underfunded, having the general concept of de-risking of DB plans. So maybe that's also some way to approach this information, that maybe the DC plans would actually be more willing to take the impact investing as an option for their portfolios. Thank you.
Very good question. Thank you very much. The situation is actually completely opposite one. The DB plans are the ones who really have experience, who really are investing, and who really wants to drive this topic forward. So DB is actually the one who's doing the most. And DC is maybe catching up, but not yet there where we should be. And it has also a regulatory background. Also in Eastern Europe, just the regulation is so strict that even few pension funds can't even do this kind of stuff. So they are, by definition, not allowed. And there is also a kind of big push necessary from the regulator side that the investors can actually do something with their capital. And maybe just to put it in numbers, what we are speaking about. This exchange with governments and development banks from asset managers is already there. It has been approximately 750 billion in size that went into climate kind of transition assets, which is only 1% of the market capitalization. So that's actually really nothing. And if you compare it with the sustainable investments of 35 trillion, okay, 700 billion versus 35 trillion, it's a huge mismatch where this reallocation should be really a substantial one going forward. Anybody else? In that case, thank you very much. Enjoy the rest of the evening, and we are here. Father, thanks.